This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashurthis. Thanks for joining us at XM.com. After getting battered and bruised for several months now, the US dollar might be on the cusp of a comeback. The greenback staged a furious recovery last week, drawing fuel from its safe haven qualities as risk sentiment turned sour, and from some survey data which cast doubt on the popular notion that the Fed will cut interest rates soon. Long-term inflation expectations in the Michigan Consumer Survey rose in May, underscoring the risk that the Fed has not slayed the inflation dragon yet. The dollar edged higher in the wake of this dataset on Friday, as traders started to flirt with the idea that there could be another Fed rate increase in June. Even though the market-implied probability of a June rate increase stands at a mere 12%, that number might understate its true likelihood in the eyes of FOMC officials. Investors brushed aside the hawkish remarks from Fed Board Governor Bowman last week, but there is a litany of Fed speakers on the schedule this week, and if they echo a similar tone, the probability of a June rate increase could keep rising, helping the dollar to extend its gains. With the Fed contemplating another rate increase while the Bank of Japan insists it's too early to follow suit, the yen has come back under pressure, smothered under the weight of widening interest rate differentials. Still, there is a ray of hope for the yen in the form of inflation releases this Friday. Gold prices are trading higher on Monday, defying the spike higher in U.S. yields. The problem is that market pricing around Fed rate cuts seems overblown. Gold is currently trapped in a sideways range, and if Fed officials this week are successful in convincing investors that a June rate increase is in play, the next move might be towards the lower boundary of this range. In the energy arena, oil prices closed lower for a fourth consecutive week on Friday. Despite news that from June onwards, the U.S. government might flip into a net buyer of crude to replenish the Strategic Petroleum Reserve, oil prices still got hammered. Finally, in Turkey, no candidate has managed to exceed the 50% threshold, meaning there will be a second election round in 2 weeks. The Turkish lira fell to a new record low against the US dollar in the aftermath. This was today's Daily Market Comment. Thanks for joining us at XM.com.